In this video, we're going to talk about the contraction, expansion, and trend, but most of all, contraction and contraction breakout. Why? Because this is the fundamental of every market, anywhere. It doesn't mean they always happen, but when they happen and you see it, you have a huge advantage if you understand how to follow it. When I started this over 20 years ago, I was watching Martin Cole online. He explained this through accumulation, distribution, and profit release. It's the same thing as CET, right? But he explained it, but there was not a method for it. It was just, yeah, everybody can see it. It's accumulate, it's distribution, that's what we call expansion, and then it's profit release, that's what we call trend, right? So I kept working on my method that I've been doing before these 20 years, and I realized I did similar to what he was talking about. So something was right in what I was doing, but I didn't understand the full concept yet. So then I started to watch another YouTube channel that was talking about the CET, the contraction, expansion, trend, similar to accumulation, distribution, and profit release. And that made so much more sense. So one day I decided, well, let's make an indicator out of this, simply because all I needed was to have an easy identifier that I can use in my trading. So I decided on the 4-hour time frame, there should be 3 candles. 3 candles that you see like here. There is a master candle in the middle, and there is one inside to the left and one to the right. And this is 12 hours of price moment where price couldn't break the middle candle's high or the low. That's consolidation. On lower time frames, it will be much larger, much wider, of course, right? So I started to build upon this strategy and realized that I could see this on every market, not every day, not every week, but it could be a way for me to understand what direction should I be taking right now. If you were here and saw this one and it says buy, okay, it doesn't mean you can't sell if you become better and better in trading, of course. But chances are, if you are having a system that gives you buy signals after this one, chances that you will do a good trade is pretty good, right? So that's why we are using this. But to understand this, we must implement 2 very important rules. As you see, there are a lot of C's here all the time, right? Because it's consolidated a lot of times. So the first rule is this. If we have a wave, A to B to C to D, if you're a wave trader, you know what I talk about, right? This is a wave from A to B. It ends here. And here also a new wave starts, a down wave, A to B. It ends here, a new wave starts, A to B. So when the market starts a trend or end a trend, we are interested to look for contractions. When the market ends a trend, start a new trend, we are interested to look for contraction. Same thing here, same thing there. That's rule number 1. It must start a wave or end a wave. Rule number 2. And that's my rules. That doesn't mean you need to follow them. You can find your way, but that's how I do it. Every time we find this start and end of a wave, when we are selling, we always want it to be at least 1 higher high. 2-wave structure like this. And when we are buying, we want it to go down 1 time, retrace, pull back 1 more. Or trend 1 more. Depends how you see it. And why we want to do that is because the most common waves happens to to 3 higher highs, lower lows in the market. It doesn't mean it can go 20 waves down or just one. It can, but this is the most common. So if we can strictly follow a start of a wave to end of a wave, and it has to be a higher high or a lower low. 2 wave structures like this. The reason we do that is because we don't want to end up trying to do this during massive sideways consolidation. Because what we see on the 4-hour chart in consolidation, it may be something else on a weekly, daily, monthly chart. Same thing if you do this on lower time frames. Then it will most likely consolidate a lot more. But then if you go to like 4 hours, like this is, then you will see it much clearer. So if you see a tight consolidation, like here, change to a higher time frame, because that you need to have a clear picture of what's going on actually. Right? I'm going to show you what to do in all these with all these C's here. So we have 2 rules: start and end a wave, higher high, lower low. Right? That's the core principle of the CT system. Okay. In this video, you're also going to learn how this move here was no surprise. Not at all. Not for a CT trader. And how in the whole world could we know this was going to happen? We can't. But if it happens, we know what we should be looking for. That's the difference. That's the difference between people trying to predict the market every day and people who follow the market every day. As you know, we trade this CFD chart, contract for difference. There are different feeds from different brokers and so on. Decide to work with one feed that works with your method best. You don't need to watch every feed. You need to find one, follow it. You will miss some trades, but you will also grab other trades that other feeds do not have and so on. And the contraction indicator is here to have it as a training wheels for you. Because after a while, you will see this on your own. You don't need to have the indicator on chart. But this indicator, as you see, what it do, it plots green when there is so-called trend. It plots red when it can't move outside of a contraction, consolidation, and yellow when it can actually break out of a previous contraction. This. They can also turn black, as you see here. That's because the script can't identify what this is. If it's trend, if it's expansion, or if it's a contraction. So they can happen, but that's not the script that is doing that. That's the original candle color. Because if I was hiding this one, you see it's black and white. This. So, what is the first thing you should be doing every start of a week? You should first make sure, this is for gold, no matter if you trade gold or not. We are going to talk about gold, mainly in this video. Use FXCM. What time frame you use is up to you. I use from 4 hour, daily, weekly, and so on, because I don't need to day trade gold and so on. I can do it, but I don't have to, because this is enough. It will produce enough gains anyway during a year. And I know that based on my last 15 years with this, or actually more. It's probably 20, 25 as well. But then I didn't know what I was doing, or that it was called CETU, accumulation distribution profit release. But I saw this very early when I started to trade, that this is what markets do all the time. It goes sideways, it goes up and down like this before it runs away. So the first thing you should be doing, let's say now you are focusing on the 4-hour chart. We start by looking at a high time frame, because when you're in a contraction on a lower time frame, and you don't, let's say you're here, you don't know about this yellow yet. Where will it go, up or down, right? So what we can do, we can go start with the weekly. I will come to the monthly later, but the monthly is only if you are like investor and so on, because that one doesn't change that much. I think it was 3 years since it had the last buy. So 1 week is good for me and good enough. On the 1 hour, we see, I mean, gold has been crazy since many years, up, right? And we can see this is the last contraction. That's the only thing I care about, right? And you see how it broke here, meaning this is the first time we can start entering long. This is an expansion candle. This is not a trend candle, expansion candle, but this is called contraction breakouts. It break out of this contraction, can close above the middle candle's body like this. There. And consider how it has been going on for some time, 2022 up until today. It's pretty much uptrend on larger time frames like this, right? So here I can see, okay, gold seems to be staying above this contraction, right? It's an uptrend. I go to daily. Same thing here. The last contraction was here. It was broken by this candle here. The color doesn't matter. It matters that you break this one. The only thing that the red says here is that we are still inside of a contraction zone between high and low. The highest high is here, and the lowest low is here of these 3 candles. But when we can break, close a body above this one, it should be clear. It shouldn't be the same. It should be clear. This is clear. This is way above, right? This candle tells me that this is again a buy market, and we are already trending on the weekly and the daily. That tells me if I'm on a 4-hour and I was sitting here unsure what's going on, it's going to wick down, going to wick up and down all the time. Since the weekly and the daily round trip traders has already put it in trend, the probability for me when trading this one is that it's going up. So this increased my probability that the next breakout candle that was this one on Friday, then we had 2 more. This is a decent good profit in itself, of course. But that's how you can compare the 3, the 4-hour, the daily, and the weekly, to see, has the daily and the weekly started to trend, or are they also in contraction? Then I would be very careful to enter the market, because that means all of them are inside of a red zone of contraction, and it can go any direction. We don't know. But if the weekly and the daily already say they are up, chances for the lower time frame to continue up is over 90%. So it feels better to say, okay, let's say this one was breaking down, so I never did that, but if it was breaking downside a little bit, I wouldn't take it. Because I know if the daily and higher has not decided to reverse or retrace back yet or change the direction, it's most likely only going to go down, test some whatever it is, right, before it continue in the higher time frame direction. Okay, so now you understand that why we use 4-hour, daily, and weekly. And the lower time frame you move to, the more expansion legs you will see. So what is an expansion leg? An expansion leg is if you have a contraction like this, it may go up, down, up, down, up, down through this all the time. It actually is an expanding consolidation zone. And you can trade them, but we are not going to learn about that in this video because that's an advanced teaching that we not want to focusing on today. But you can trade all the, you can trade contraction zones. You can, because that's a ranging market, right? You can trade expansion zones only on lower time frames. But most of the time we want to be in trend because that's where we get most pay, right? Okay. So now you know, start and end of a wave. Higher highs, lower lows. If you find a contraction there, that's a good entry. Okay. So let us take a look at this. What does it say? Let's take this big upwave here. Here comes a contraction, right? Just because it's a contraction doesn't mean you should be selling. You need to break this one. Did you break this one? No. Kept going. New contraction. What happens here? Contraction breakout, this yellow candle. So when you're down here, say, oh, but it's a huge sell candle. Yeah, but how can this be huge if you see this now? This is not about winning every time. This is about staying in when you're winning and leave when you're not winning. If you understand that concept, you understand a lot. So this is ending an up wave and starting a down wave. And guess what? There is a high, there is a higher high. The two rules are fulfilled. And I want you to really, really look at this. Because I said that we could know that this was going to happen. Or no, we couldn't know this was going to happen. We can know that if this has happened, this could be a potential good exit down here. How could we know that? That's what we're going to find out now. Let's go to weekly. Now we're going to learn about the value line and how these consolidation zone works. Now we're on the weekly. You see these three candles. That's 3 weeks of up and down on the weekly. Lot of points, of course, so you can be trading it on lower time frames. But this is the weekly. Okay. And what markets likes to do is run away from it and come back to it. Doesn't happen every time. But what we're going to talk about now is value line. Always mark up your value line, because your value line is the most common place where people say, oh, it was news, or it was this president saying this and so on. No, this was already set up mathematically way before that. You see that how this confirmed that we should be buying, right? We should. But if we have never retested the 50% of the last contraction weekly, this level here, you should always mark up so you have it on lower time frames. So if you get a market that comes down to 50% and you have a setup with your system here, go long. Okay. So let me, not that one, not that one, this one. Let us put a circle on this one. Because when you understand this type of price action, you will also have a better understanding that gold is not that scary or dangerous that you think it is, or many people think it is. The thing with this one is, when you have a contraction breakout, you can build systems that you will take trades in retracement zones down to the bottom here, right? But you can also just simply, when it moves up, Like this is weekly. If you want to trade weekly, do that. If you want to trade monthly, you do that as well. Then you'll be in a 3 years bull profit for now. If you were staying in, right? Investment, perfect place to be. Okay. So when you're entering here, what I do normally, I put my stop below this one. Or actually I hedge it, but let's call it a stop below this one, because this is the expansion candle, and many times it just runs away. The cleaner and the longer this one is with the body, the better it is. But this one was small. But nothing is black or white. It's gray and gray in market, right? But what I also know is that, let's say I'm being stopped out here. Okay? What is my next option? My next option to enter is at the value line of the last contraction here. Down to here, right? If I was entering here, I'd probably put my stop loss below the wick of this one, because that is not very common that market to trace back to there before it goes up, right? So this long wick here on the weekly, that's one. Remember, this is 1 week of price action. On a 50-minute zone, probably didn't even look like this. It's just smaller candles, right? So if you were getting a setup here, and you know about your weekly value line, then you know you're probably in the money. And this week here, if you were entering at 44.28 and the week ended at 49.53, you would have a pretty good trade, because you are now educated in how the contraction zones, expansion zones, and the value line concept works. Okay? And that is why I said that if market is coming down, you see how this weekly value line was hit. If you don't know about this, you will never understand why should it stop here. It's because consolidation is about this and this, order blocks and all hula badula out there, right? It's not. It's contractions, it's expansions, and it's trend. You're not going to learn this in one day, probably not 1 week either, or 1 month, but you will start making money with it within 1 week, definitely, if you follow the rules. Start of a wave, end of a wave, higher high, lower lows. Okay, let me take off this one. So let's say now we entered here, we took a predefined target, but we see market continue dropping. Why in the whole wild world should you exit a market that is going in your direction? People say, oh, I'm going to take 1, 2, negative, or whatever they're doing. That's the dumbest thing you can ever do as a trader. Because if you can take advantage of trends and only of small breakouts, you're not going to make it in this game. Not a chance. I've seen thousands of traders doing this. Some are very good at it. They are profitable. But they put themselves in a position that is almost impossible to survive in the long. I talk about 5 years from now. Not going to happen. Let's say you take one range of this one. Say you were entering here, and this is your range, right? This is your one stop loss. When you do it one more time, like here, you exit, because now you have done 1 hour. You are happy, you want to trade. And then you just sit and watching here for days, possibly weeks, before you get the new setup here. Tell me, why should you leave? You can take partials. You can have like 10% left when you're down here, but you're still in the market, right? Right? And how can you know that you should exit here? Because of the weekly value line was here. And if it's a value line, I would immediately set my stop above the last 4-hour close candle. So when I come down here, I put my stop here, stopped out. I did almost a perfect trade. That's how you must be thinking to be a professional trader. And especially if you want to work for larger institutions and so on, having this knowledge with you will probably outperform most of their systems. I don't know, but they use this even if they don't use it, because this is how the market is structured all over. But you can't just take a contraction and trade it. You must understand the start and end of a wave, the higher high, the low lows. So let us take a look. Let's say now we exit here. Okay, there are no contraction here. Probably it is on the lower time frame, so you can trade this one up. If you see this same structure, end of a wave, start of a wave. This is end of a wave, start of a wave. It may work on 5 minutes, 10 minutes, 15 minutes, and so on. Still, bigger time frames are long. But if you are a day trader, you don't care about what monthly and weekly are doing, right? Because you are only here for the day. And if you understand this concept that this was a good exit, it's more likely this is a super hard support to break. And now you have potential to actually find a setup on lower time frames. I just stay on 4 hour because I don't need anything else. I watch the daily, weekly, and monthly to see, are they also in contraction, or have they actually shown a direction? If let's say you are here and you know that the weekly and daily is already up here. Of course, they are not when you see this, but when you switch chart, you see this is not a contraction zone on the higher time. This is a trend zone. Chances for it to go up is much higher, and that's why you only should take buys, right? So let us say now we exit here, we come up here. This is end of an up wave. We have no contraction. Now we have a contraction. Okay, this is a bottom contraction. It's end this wave, this down wave. So the only way we can trade this is when a candle break the upside here. And that should happen between, on the 4 hour, between 5 to 7 candles after this one. If it takes more time than that, most likely not a valid one. Wait for a new one, right? So in this situation, in the middle of this down wave, because it didn't reverse, this is just a continuation. Very bad trade to take. They stole the price here, but they didn't reverse it. So what do? We move further down, right? And what, this is a low, this is a lower low, right? So we have done a wave down. Now we're potentially ending that wave. But to end this wave, we must have a candle closing above this yellow here. See this candle? Doesn't signal that now we should be buying again. And look at the daily, look at the weekly. Does it say going up again? If we do that, then you have probably a better feeling that you are now going in the higher time frame direction again, right? This sell here was valid because it was long on the higher time frame, but this was also a value line on the weekly. I don't know what it was on the daily, probably something there as well, but I just need one confirmation. So this is ignored. This is not ignored because it ends a down wave and breaks for a new up wave. It done the lower low like this. Perfect. So when you see this here, this one must close. You could put your stop here. I normally do that for my first order, or I hedge, but again, I'm not going to go over that because I know 50% of this one is always risk. Always risk, or risk is a better entry, right? But many times it don't do that. It just breaks and continue. And that's what I rely on when I do this. Okay, this one. Okay, let's say we entered here. Stop loss here. See what it do. Most traders will be really happy here. And then we can say, okay, where should I exit? Well, look for resistance zones, last high like this, have a defined standard deviation, as we call it. We measure this one to this one up to 5 times. It's normally where it goes. I don't know how many times this went, probably 4, right? Find a way to, and look at the daily. Where's the next daily high? Was probably here as well, right? 4-hour, daily, maybe weekly. Probably a good place to exit. Close profit is always close profit. What happens here? This contraction. Does it end the wave? No. This ended the wave. So you may think, well, this is very close. Let me take this one. You will be sorry you do that, because many times it will just flash right up again. Don't do that. Follow the rules. What happens? It goes like 20, 30 hours more. Set price alerts on this one. That's all you need to do. You don't need to watch this every day. Set price alerts. If it can't go higher than this one more time, well, then it's not anything that you are interested of anyway, right? Because you must go from this level or higher. Market go higher. What is this? This is a lower high. This is a higher high. Remember, it ends a wave, starts a new wave, higher high or lower high to higher high. Our 2 core rules is now fulfilled. What do? Set the price alert here, and it will trigger here and here and here, but it can't close below. This is many times it will do that. It's called the seat belts, right? If it can't break below the wicks, or below the body, sorry, here, it's not of interest. This one, what does it do? It's the first candle that clearly could break below. Stop here. And as you see, when I put my stop here, I also set the stop above the 50% of this one. So it's pretty double safe entry for me. Goes down. If you take this one by 5, you would easily do 5 here, right? And then you can start looking at imbalance in the market, order blocks, or whatever you want to use for target. But I just use a numeric way to identify where I'm going to exit. 5 is the most common time to do the range of the contraction that we went from. Okay. This one. Should you buy this one? Contraction. Breaks it here. You can't go up, right? There's one problem with this one. It doesn't do a lower low. See here, we don't have anything here. You can't use the last contraction. Nothing here, because this is wave 1. Wave 1, first lower low. They are normally not that common that they go into reverse the market. From wave 2 or lower low, this is a high low, right? So 1, 2, downtrend, ends a wave, starts a new wave. There, you can go again. It's just a numbers game. And the more you do this, the more you understand that if you lose 3-4 trades, you're probably in tight consolidation, and that's an experience game, what trade you should take and not take, of course. But when a trade like this coming, or a trend like this coming, you will forget about all the bad trades that you took. It's a pain when you're in it, of course, but with your data, you can log this, or you can just watch this chart, and you see that there are opportunities that will always pay me better than what my losses are. So, I didn't mention these two. a high, a higher high, right? This candle. We couldn't know that this was going to be a contraction because the last third candle is not closed yet when we're here. Again, we see that 50% is here, so I will put my stop loss a little bit higher because I know it can actually go there, wick it before it runs down, very common. But again, we can do, because we just count two levels, two ways, 1, 2. You breaks it, there, you go down. And then you can set 5 standard deviation, 5 length of from this body high here down to this body there. This candle was almost not a body, so it becomes the master candle, the middle candle. Okay, 5 times. Did it do that? I don't know, probably, or at least 4, right? But find other things, because my trained eyes see this, but you may not see it, right? This candle here has a high probability to be tested at 50%. It didn't really went down there, but when I come close to that level and market start to go inside like this, is it maybe time to put a stop loss here? Should you take partial? What should you be doing? Write down what trades are working. What did you do? Because what gold do and what Nasdaq do, or Dow Jones or DAX or whatever, is very different. All I know is that the FXCM chart 4 hour on gold works really well. And I don't find that out by doing one trade. I find it out from 15, 20 years doing the same thing over and over again, but not doing the same thing, because every trade is its own type of system, so to say, right? So this one, we entered, right? Cool. We have our first high, we have our second high. This could be a potential sell, right? If we break the low of this one. Did we do that? No. So what do? You just stay in. Here's a lot of C's. But if it can be the highest, the end of a wave, or start of a wave, we don't care. This one you would totally ignore. Why? Because if you were selling, you would need a higher high, right? This one was a higher high. This one is not. So I would never enter on this one, because my rules and my stats say that's a very bad trade to take, because it will mostly lose, or exactly lose and then run away, right? So from this trade here, these are totally ignored. See what market did. This is the high now. For me, I don't care about this one. If you want to trade on small time frames, you can be watching for this one and this goes higher. So you could basically, if market was breaking this master candle here, you could sell. But that's inside of a range. I wouldn't do that. And candles will look like this. You just ignore it. You just stay in. Because, I mean, if you enter here, you probably mode your stop loss by now, right? Depending on what kind of stop loss system you have. But I mean, seriously, when you're up here, it's massive gain anyway. So, all right, I just ignore it. Why do I ignore it like this? Because I know I'm already in the right direction. Because if I go to daily, like this, weekly, I'm already in the right direction for the bigger time frames. The round trip traders are not done yet. They're going probably higher, or they may reverse it here. I don't know. But I don't have to know, because all I do is following. Does it start and end, or end and start a wave? Higher highs, lower lows, 2 waves, for giving me the best opportunity to actually make a good trade. Same thing on any time frame. But like I said, if you go down to 15 minutes, 30 minutes, the contraction here will probably move up, down, up, down, up. And you can trade that, but that's another knowledge. That's another video, right? So what we are doing here, we are only focusing on the 4-hour time frame, watching higher time frame like a weather forecast, what's going on. So when I was sitting here, say, okay, what is going on here? It's a massive consolidation on the 4-hour. But I know that both the weekly and daily was already in trend. So, and you see this one here, this is the first high, so I couldn't sell it anyway. This is the second high. Here I could sell it if it breaks or close below this one. Never did that. It wicks down, yes, but it never broke it. That's why I use 4-hour. It's much cleaner, clearer for price action, for gold, on FXCM, on 4-hour. Right? This has been tested over and over again. I mean, we can go back to here. This is, you see here, ends a trend, low, lower low. What does it do? Takes it out, comes back to 50%. No contraction. This one could be reversal, was never. This one is a mix of expansion candles and original candlestick. It's not a contraction at least, so we don't care. We become here, high, higher high. Here we could sell. Right? Sometimes they are smaller, and then all of a sudden, down wave, low, lower low, break, we go. And this may happen. And then this may happen. They are not common. But the thing is, because I was thinking like this way back, say, well, this could be a good trade, but they don't happen that often. And then I started to look at the chart and say, well, they are happening at least one time a month. And this one trade can pay the entire amount for you. Do you understand that? One trade can actually do, if you sit and do this on 15 minutes every day, or if you do this once a month. What's your goal? Is it to have an account that is growing, or is it to enter trade every day? Ask yourself that. If you apply contraction, expansion, and trend with 2 rules, start of a trend, end of a trend, or wave, higher high, lower lows. Higher highs for sell, lower lows for buy. Then you have filtered out a lot of fake setups, fake trades, or whatever we want to call them. Right? Fake or fake is price action market, is just candlesticks. Right? So what we're going to end this with, we're going to go to the biggest time, or not the biggest, they're of course bigger than 1 month, but it's a huge one. I just want to show you, if you are an investor as well. Let's say you buy some ETFs or something for gold, right? You see this on the monthly. What do? This is an uptrend, right? Remember, this is 1 month every candle, so it takes some time for sure. What happens here? Right? This is a contraction, right? This break the contraction, right? Agree? Should we sell here then? No. Why can't we sell this one? Because it didn't do a higher high. So if you start trying to break the rules, not following the rules, you will be punished. Like in football, if you kick another player down, you probably get a red card and can't play anymore. Same thing here. If you ignore this with start and end of trends, if you ignore this with higher high, lower lows, and just take every contraction, you're going to be punished every time. Almost. You can have a lucky trade, but you will be punished every time. There's no way around it. So this is an expansion down, expansion leg down, not a qualified contraction for sell. right? What happens here, this white candle here, again, the script couldn't identify the color, but it doesn't matter. We know this because the best thing is if you do like this, and you can see this visually, but you won't in the beginning, right? You need help. You need these training wheels. And when you've done that, you see, okay, we are breaking here, there. How many contractions do you see here? None, right? Okay, of course, this is monthly, right? So let's see. For a monthly to be a good one, this is the high, this is the first low, 2 counts to the left, to the right. That's me. I'm very strict with that. You may just have a low and a lower low. So on the downside, it qualifies because it ended the trend, it do 2 waves down, but on the upside it didn't, right? Right? So it qualified for a buy, but it only expanded down, but it didn't qualify for sell because it didn't do a higher high. But when we break here, enter. This was the 2nd October 2023. We are now 2026. This is 3 years of crazy gold move. How many do you think can predict that gold should go to 5,000? Yeah, many people can. They do YouTube videos and say on Instagram, so, oh, it's going to go to 5,000. And I mean, market can go up and down. So at one point, they will probably be right on one level. Let's say you're saying gold going to 1,000 or 5,000. You will be right. One of them will probably happen. This time it was 5,000. What if you instead follow this and don't care where it's going? You just follow. Do you see any contraction after this one? No, you don't. On the monthly, it's just up, up, up. Sure, it do. I mean, these are massive mo sell and so on. That's why you can do them on the 4 hour, because the 4 hour may have a reason to go down based on contraction on the daily, not the monthly, because they are non-existing. It's just showing that monthly is already trending like this. So 3 years investment here could done you well. So when you understand this concept, that most people that is watching say, great, looks good. And then the people that put in the work but do not follow the rules say, well, it was just another system and it didn't work because you were kicking down the other player. You didn't follow the rules. And then we have a small percentage of people that actually do it this way. You may call this, oh, what a boring system. It is super boring. But you know what? No one said trading would be a social game. It's about following the big money and what they are going to do, not trying to beat them. Because you're never going to do that, because we don't have that money anyway. Their volume pushed gold up here. So I hope this video gives you an insight. And you can be a weekly trader, you can be a daily trader, you can be a 1 hour, 30 minutes, 15 minutes, and so on. If you are, for example, on a 30-minute chart, watch the daily, watch the 4 hour, watch the 1 hour, or if they already in trend, then probably your day trading system on 30 minutes going to go in that direction anyway. So this is not to say you must be on 4 hour, you must do exactly like Daniel said, because that's not the case. I just gave you the core concept for something that has been working since trading pretty much was started. This is how the market is created by all these millions of trades putting into the market. It contract or consolidate. It expand up and down, test highs and lows in this. And it trends. Then it repeats. And by knowing that, super good. That's me like 15 years ago. So, well, there's something in it, but how in the whole world am I going to actually trade with it? Because if I don't know how to enter, how to exit, what to look for, I'm never going to be successful, right? And that's what this do. So add this indicator to your Tradingview station. You can do this on the free one as well. It's only one chart, but you can still do it. Study the 4-hour, the daily, and the weekly, every day, every week, every month. And what you will realize is you're not here to be right. You're not here to look good. You're not here to perform the best or show your statements, chart, and so on for other people, because that doesn't matter. What it matters is what you are doing if you want to make money in the market. Following something that is solid, always been working, always will be working, because these are the three concepts: sideways markets, up and down, trend one direction. And sometimes we break once, sometimes we break, come back to 50%, or we break on the other side. That's the expansion leg, so we can't do anything about it. But the more you study and the more you can apply with what you already know about order blocks and or support or supply and demand legs, like I called them from the beginning, because it was not called order block. Imbalance, I know you have other names for that, but I call it imbalance. All this stuff, you can apply that, no problem, if you know the main direction. If you know what the big money is doing, what the higher time frame is doing. If you apply this simple 2 rules, and you have patience to wait out for the closed candle to break or contraction. Keep doing that. And never leave a winning trade. Never, ever. That is why most people lose in these markets. Thank you.